Happy Friday, Eric Bible with the Bible team at Neil Home Loans. And with the school year officially winding down and have ended for most, summer vibes are officially here. And summer typically means an increase in activity for both our buyers and sellers. And yes, despite elevated interest rates on mortgages, that activity has been picking up. We've seen more activity on the buy side across the nation, as well as inventory. Yes, inventory is not at the levels that we would like, but activity across the board from multiple referral partners that we're speaking with are seeing and experiencing the same thing. And this week, with the amount of data that came out, interest rates start the day, the 30-year fixed at 7.03%, which is down from last week, 7.29. So an absolute reprieve. And as we start heading into the summer months, a reprieve we all, buyers and sellers and us, can absolutely bask in. So let's dive in and understand what drove the movement this week and ultimately how you can take this information to your clients. So this week, a slowing economy. And that's really been the talking point across the Fed, multiple pundits, really what's happening within the economic landscape. Last week, we got the second read on gross domestic product, came in lower than the first read and absolutely lower than that of the fourth quarter print for gross domestic product. Manufacturing, all of those components showing that our output as a nation is starting to pull back, really indicative of the cost of money being so elevated, consumers feeling the pinch and not spending at the levels they've spent in the past. Well, this morning, we received the all important BLS, Bureau of Labor and Statistics, jobs report for the month of May. And at face value, it showed that labor is more resolvent and more strong than previously anticipated. But the key things here is that we want to understand kind of the numbers. So at first, unemployment, it rose from 3.9 to 4%, not necessarily a good thing for the overall nation. However, for mortgage rates, for the Fed specifically to start cutting rates, they've been very vocal in that an increase in unemployment, instability within the labor markets will warrant swift action from the Federal Reserve. So, yes, on one hand, we want to celebrate on that, and the other, it's devastating to hear individuals losing their jobs. But the interesting part in this report was around new jobs created. Market was expecting 185,000. However, there were 272,000 new jobs created. So there, immediately markets opened this morning and are still they're trying to understand and dissect. So as it sits right now, rates could potentially get a little worse throughout the day, but really diving into the report, there's some key things that we need to understand. So at first, full-time jobs, 625,000 full-time jobs lost. However, there were 286,000 part-time jobs created. Now, one could say, well, hey, we're heading into the summer months. This is typical of seasonal work, but looking at what's occurring behind the scenes with inflation, the cost of goods, everything rising, could it be that individuals are having to pick up supplemental employment in order to maintain their level of spending? Obviously, time will tell, but it's some very interesting information and talking points to walk away from. Yes, we get inflation data next week, but I can undoubtedly say that the Fed is watching the unemployment number and it moving consecutively month after month higher. It's again showing signs that the labor market may not be as strong as we once perceived. So the question becomes, what can we bring to our consumers? How can we use this information? So as we know, a tremendous amount of clients made the decision over the last few years to sit on the sideline and wait. Interest rates from where they were at the beginning of May to now have absolutely pulled back. Yes, at one point we were breaking above 7.5%. Now we're kissing that 7 high six range. This is an opportunity for you to engage with those clients and let them know that real estate yet again is on sale. Interest rates have pulled back, and there are signs that we're going to see further decline, but we know what happens when that decline occurs. Home values continue to soar. So, again, a wonderful touch point, wonderful opportunity to engage with your database and telegraph that interest rates are in a better position than they were a few weeks back. It may be time to engage and start looking and posturing into the summer months. As always, if you're running into challenges with communicating this message to your client base, we're here to help. Feel free to reach out anytime. As always, make it a great Friday and an even greater weekend. Thank you.